Hey guys, welcome back. In today's video, we are talking about AMC going higher, the shorts liquidated, the AMC gamma exposure, and many more in this video. First, we're taking a look at this. So last week, we had a very successful week where AMC went up 33%. Now, what we have to understand is that this, of course, is very normal movement. It's just reflecting where AMC should be going. When we talk about how well fundamentally AMC has been doing, how well it's projected to do, not to mention on top of this, how well the box office is doing, and we talk about the efficiency, you understand why institutions, money, capital, investors are willing to accumulate as much AMC as possible. And in return, we are seeing AMC go up 33%. But like I've said all the time, at the end of the day, it is just a very normal reflection of what true price discovery should be. This is something we should have seen ages ago. You know, it's something that we're only seeing now, and it isn't anything new. It isn't anything that AMC has done that is in terms of shocking, but it's just what we should be seeing at the first place. So it's very good that we are seeing this, and it's good that we're up 33%. But remember, there's a lot more to come because of how well AMC is doing. And when we talk about Friday, you take a look at some of the resemblance. Firstly, we had another 7% gain. And you're seeing this kind of resemble some we've seen in the past, which is HYMC. Remember, we're seeing now AMC being repriced higher, much like Highcroft, which what we talked about. It went from $2 to over $50 and settled now around $30 per share. And we're looking at a very similar movement right now as well. We talked about Adam Aaron investment. We talked about the movement from HYMC all the way up to 50, close to 60, before settling that around $30. We're going to be seeing the very same movement happen to AMC. Now, the difference for AMC is that there's a lot more riding on this. There's a lot more involved, because if we talk about AMC going from $2 where we are right now all the way to $50, the amount of shorts that's going to be liquidated throughout that journey is then obviously going to push AMC price even higher. So what I think will be different is the same things would be going from that $2 to $50. That's where I think AMC should be on the trajectory too. What I think it will be different is how we see HYMC kind of settling around $30, is that during the way from going from that $2 to $50, so many short positions are going to get margin called and liquidated that is actually going to push AMC way higher than something that we are expecting, like we are seeing here. And so that's the difference I think it is going to have, but it's still something that I do see AMC to be going towards. And also another big thing, and I'm not sure if everyone caught this out, but on the Friday, on the last 10 minutes, on the Thursday, when we saw the market close, AMC during the end, kind of what we are seeing recently, is a ton of volume then comes in, which pushes the AMC price higher. And this was during the market close. And this once again is just showing some stuff we talked about in the past, where they are trying to undercover and then not put as much attention towards it in terms of accumulating AMC. We've seen that they do that with the dark pool, and something we're going to talk about later on as well, but we're seeing them do that right now. And it feels like is that they've realized that the only possible way for them to try and buy as much shares and accumulate as much shares of AMC is, of course, during market hours. And they want to do it at a time where it doesn't have a major effect on the price, because the short sellers don't want the AMC price to go up exponentially. They just want to accumulate. They just want to try and buy as much as possible. And this is why they're trying to utilize the 4-day trading week that we saw this week. You know, we have 3 days, and if they are willing to do, and if they can do it, and we're able to buy as much as possible during kind of the final endings of the market hours, then it doesn't give people the time to digest and react to it, especially the fact we have a 3-day weekend for the market. But that exactly shows what we have talked about with how right now you are seeing the desperation, you are seeing the demand for AMC shares going up high, and it really begs the question to why is this happening now? And this is what we've said with how people are realizing the opportunities. And you can also see here, this is not normal for AMC. 6 million shares hit the dark ask price at 283. Either someone got liquidated in dark pools or positioning here. So we've been seeing so much volatility happening right now, and it's really going down both ends, where we are likely to be seeing some short positions getting liquidated. We talked about how certain short sellers took up massive positions when AMC was below $1, and when AMC went up to 150, they decided to double down. It then obviously went to $2 to where we're now closing towards $3. You start to see where their positions are going in the red on. And what's important there is realizing that short positions, and again, not all of them and not the major ones, but short positions are getting liquidated, and it's why we're seeing this volatility. But paired with that is, of course, the people who are trying to gain as much as possible, to accumulate as much as possible, and it's why you're seeing it kind of happening from both sides of short sellers getting liquidated, but also large capital trying to buy as much as possible. Also on the first day, and this is why we talked about with how important it was for AMC to close above 250, which was the fact that they tried to drop it below 250 twice. And it's very important why we have to see this, because you just look at AMC and it closed at 283, which is obviously very good, but that doesn't tell the whole story. And it doesn't tell just how desperate they are and how meaningful it is for AMC to close above 250. The fact we saw the manipulation come in, the fact we saw that amount of suppression happening for AMC, despite how positive it's been recently with the news, the fundamentals, the box office, it just talks to how these are, of course, high frequency. These are man-made, trying to prevent AMC from liquidating, from going deep in the money, and that's why we saw that suppression happening. So it really tells us the story of exactly what's going on. And in terms of why we are very positive going into next week and the next month, it's exactly because of things like this. The fact that they are trying as much as possible to prevent AMC from going up, despite the fact that they've claimed that they are not trapped, that they've covered every short position, it really tells a different story. And so you can see why all this volatility in AMC. Who would be opposing the market cap of AMC, the world's largest movie theater chain, to rise somewhat following record level box office numbers and considerably improved financials? Seems pretty natural, and SI is indeed quite low, or something else. And a lot of things to be talking about here, which is just like what we've said. Why would we be seeing suppression and manipulation on a stock that has reported nothing but positive news, for a stock that's in the industry that's reported nothing but positive news, seeing the thriving numbers? Why would we see manipulation if it weren't for the fact that there are short positions involved and very large short positions involved? More important is talking about how recently they're claiming the short interests have dropped, yet we're still seeing the manipulation, we're still seeing the suppression, and most importantly, we're still seeing the synthetic short positions going up. And it just goes on to say what we've said with how the reported short interest is just a number to try and throw us off. What's important is understanding whether or not these shorts are still rehypothecating and recreating synthetic shares, and whether or not they are still trapped. And the answer to those is that yes, they are still creating synthetics, and yes, they are still trapped, and that's very important for AMC. Now, also talking about why closing above 250, why going into next week is very important. It's because what we are seeing right now is another big options ramp building, where we saw hundreds of thousands of calls going in the money from $1 and 250s and above. What we're also seeing right now is tons of positions now positioning in for the $3 calls. We also talked and mentioned the $6 and $10 calls, but there's obviously a large chunk coming in at the $3 area. And so next week, our battle will, of course, be 301. But it already talks about how powerful we can be. And you can already see the effect that it's having. When we talk about calls being in the money, when we talk about the pressure that it applies, this is something that we are already seeing. And in the money calls forces markets to hedge with buying shares. And so as we see the in the money for June 18th, you guys can see 186,000 with the max pain, remember, being at 150, even though we're already at 250. You talk about how effective this is. And going into next week, we already have 103,000 shares calls in the money. We have 121,000 out of the money. But remember, if we're able to go above $3, we're going to see this number flip a lot more. And we're definitely going to be seeing more volume ramped in because they're already seeing how well the options are doing. So it's definitely has an incentive to encourage even more people. And what we are seeing is currently they've added a $7 strike as well. so many call options are happening for AMC right now is because they've realized what AMC is about to do. They've realized the positive outflow that AMC is about to show, and that's why they're trying to gain advantage of this. And you can see how important this is already, where we saw Wall Street faces record 8.3 trillion options expiration Thursday. And so if you want to talk about how serious this was and why we talked about why this was important, it's because they're heavily involved in options. Now, it's funny that it's happening during a time where AMC is going up as well. Again, I just don't think that there can be so many coincidences. It isn't to say that the AMC options is responsible for the 8.3 trillion. Of course, that's an insane number, but it's the fact that as we're seeing momentum happening for AMC options, as we talk about kind of the liquidities, the collaterals, all the margin calls falling off, you start to see how they're facing these record numbers. You start to see how everything comes into play. And this is something we've seen in the past multiple times. And again, I will keep on saying with this is that every time you see whether it's momentum happening for AMC or whether it's momentum happening for GME, suddenly the market has some sort of news which talks about volatility, which talks about illiquidity, which talks about margin calls or collaterals. And you start to see these all the time. Next time, if we're seeing GME having a major movement or if you see AMC have another major movement, pay attention to the news and you can talk about how everything is always linking in it together. And so amidst all of this, of course, what we're looking at is just the gamma exposure for AMC increasing like we've never seen before. But what we have to realize is just how much potential AMC has right now, how much potential AMC will have going into the next few weeks, next few months, and why the short sellers are worried. And another big thing is someone explained to me, like I'm John Hampton, what happens when AMC hits 566. Now, I find this very, very funny because of what it means. And the reason for this, the context for this is when we first saw AMC go below $1 at the 0.93, Joe Hampton was very vocal and he talked about opening short positions. He talked about shorting AMC to zero, to bankruptcy, to delist. And when it went and spiked up to 190, he then talked about double down on his positions. And I think during this pullback, he was very vocal again. But since then, AMC has gone all the way up to 283. And so it's quite funny that we know he's in the red. We know that he's losing a lot of money. And all of a sudden, he doesn't think AMC is going to get delisted. And what we're going to see is that AMC is only going to continue to get higher. So you can expect these short sellers to lose even more money. And what we realize is that it's not just him, but short sellers in general do not want to pass 556 because of the MOAS potential that it will have. So let's talk about why it's significant. Because firstly, above 566, note holders can convert debt into equity. There will be dilution, but the debt will also be wiped off the books. And above 792, conversions accelerate. And what's important about this is that we have to realize this is dilution, but it pays off the debt. And this isn't dilution to a serious amount, but it will be improving the fundamentals by a serious amount. Because in my opinion, I think that AMC paying off debt whilst diluting will actually have a net positive effect where it will actually encourage even more capital to flow into AMC. And so normally when you talk about dilution, you tend to see a stock price fall. But if this dilution is able to be used to put a company's position in a top-notch position, then it's going to encourage actually more. And that's what I talked about, why I think the net outcome will be positive. And remember, they will be able to cover hundreds of millions in debt to equity. And that's why I think it's very, very important. And remember, this will be at the cost of a lower amount of shares because they are converting it with the price of the shares being at 566, which is something that it's obviously better than if they were to convert it at the current price of 283, because the same amount they raised will require different amounts of shares being used. And furthermore, we have to realize is that Q2 earnings will be fantastic as well, because going into this, if we are able to see AMC pay off debt and release the Q2 earnings going to a positive, very, very positive Q3, you can talk about how this is going to have a massive effect and why this will easily accelerate AMC, and is why I'm extremely excited about this. And that's why I said a short-term dilution will have no impact on the long-term bullishness of AMC when everything is paired in together. And if we take a look at where we're going right now, it looks like we're mirroring the past. It looks like we're on that upward trajectory. You can see here of what happened when AMC goes to 52. But I think it's also very important to note that recently Adam Aaron has been hinting $75, which I think is also playing a very significant part to where we think the price is going to go. And so don't be kind of fooled by what everyone's trying to say right now in terms of the media articles that talk about why AMC is so bad. Because if AMC is so bad, why will the smart money and institutions keep buying hundreds of millions worth of the stock at $2? And that's the question you should always be asking yourself. Again, if people are willing to buy, why would this stock be bad? Especially if firms who are willing to put in hundreds of millions of dollars. And when we talk about the AMC position right now in comparison to the past, you can see the potential we have right now. You can see the bullishness and why I say AMC can easily go above the previous market cap that we had, the previous high that we had, and go way beyond something that we can imagine. And if you look at the technicals, again, $3 is still the resistance. It's something we talked about. $3 is not only a psychological resistance, but it's also a very big technical resistance, and it's also a big playing part for the $3 calls as well. Some areas to be looking at if we are seeing the pullback is somewhere along 261. Again, these technical analysis are just something for you to take a gander and look at and make your perspective. It isn't something major in the sense of how well AMC is doing. And the fact that we're seeing them having FTDs on so much AMC shares right now, it shows that currently, there's a high demand for AMC shares, but a low supply of AMC shares. And that itself is very important to know. And furthermore, even with all the price action right now, AMC is extremely positive, AMC is extremely bullish, is why we talked about how well AMC is going to do. For GME, we can also talk about how, firstly, GME easily right now has the ability to talk about a catalyst, whether it's what we've said within the past, large buybacks, strong earnings, major acquisitions, or unexpected positive news. All of these things are happening right now, and then that's why we're having that major effect. And you can expect if GME were to make another big announcement, it will have an even bigger effect. As for the reverse repo, we closed at 0.25 on the Thursday. What is important to note is that this week's reverse repo was actually spiking a large amount, going from 0.2 all the way up to 10 billion, then back down to 0.2. And I think it's very important to really highlight that because it shows how volatility is at an extreme high and that they need money at any time. And that talks about how margin calls can happen at any time. As always, none of the financial advice, and I'll catch you guys next time.